So, guys, welcome to our Thursday evening session. Okay, for all our students and anyone that's going to jump in and listen to this on YouTube or on any other media platforms that you might be listening from. Okay, so before anything, I'm going to quickly go over an analysis I did with the students. So, let's look at USD CAD, guys. So, USD CAD, I hope you guys got some profit from that. Now, this is why I call the USD CAD the Looney. Marlon asked a good question this afternoon. He said, "Would there be any re-entries?" And at first I said no. And then after the price provided a H4 one. However, we've just had this massive manipulation take place. Okay. And for that reason, I will post it out on the group just to make sure that everybody knows why. Because whenever anything happens, apart from what we had. So we caught the stop hunt here. The price did exactly as it should. The price formed a manipulation bar here. So I guess this was a good sign to come out. But because it happened in Asia, and this is what I mean about the timing, I don't reckon anybody was awake really. From those of for speaking and saying that, guys, I'm talking about anyone from the UK, which is where I'm from. But we had the manipulation bar, which would have been the sign of the a bull trap, and the price went into reverse the other way. So I mean, we put our stop losses halfway, so you should have taken about 50 to 60% profit from this movement. I mean, the accuracy of it was fantastic. I gave you the trade exactly from the spike all the way here. Okay, and I will talk about it in more detail as to why I chose that area specifically in terms of the spikes. But for now, um, it's not part of the lesson. So the price spiked back down again, and we had this area here where the price took this low also. Now, the reason the price, as you can see, was doing this movement. Now, I knew that USD CAD is supposed to go long. Okay, and there was a bit of a delay with it. So this afternoon, uh, discussing it, had that feeling that, make sure our stop losses are 50% profit, but everything else was fine. Okay, if I go to the H4, you'll see exactly what's happened. So on the H4, we had the clean stop hunt with the body of the candle reaching into the zone and then the stop hunt. But then after, with the news that came out from the Federal Reserve, so 5 past 5, we had the news from the Federal Reserve. You can see what we've had here. So a lot of this movement right here, so 400, not 400, 44.7 pips out of this movement to go long was all wick. And this is something that you have to account for in the market. It doesn't always happen, but all the price has done, okay? And this is why I told you that the first week of the month is always crazy. And if you're trading USD CAD, is even more doubly crazy. That's why it's called the loony. Okay, it's because we have this very strange price action. Now, for that reason as well, I gave Pound USD short, which it has done the short, and I'll go through that quickly. But you can see what we've had here. So this spike, the price spiked right into this second supply zone lower down, use the liquidity from here, and it's pushed long now. So this long should be the short long. However, we're not done out of this trade yet, because now that we've had the massive stop hunt in this manner, okay, we can use any of the swings before the stop hunt. So we can use this swing here. We can actually use the manipulation bar area, but I'm just using the place that's slightly higher. So now on the M15, if we look at this price action here, this is and put this here. Yeah, so here's the manipulation bar area, and here's the market structure break. So now if I pull the swing with our Fibonacci up to here, let's put this right here, then what we should have is a very good short. So I'm looking to put this here. So we're looking for an RTO. Now, the good thing is that there's a nice liquidity gap on the 5 minute that I was looking at earlier on, or the 1 minute. Okay, so when the price took off very abruptly, you can see that I didn't give much of a chance. This is actually a H4 stop hunt again, MSB and RTO, but this time the price actually went. So this delay in price when I gave the H4 call, okay, the price just basically did the same thing, but with Federal Reserve news from the US, they always provide manipulation so that, they can do what they need to do. So there's two options. When the NFP results come out tomorrow, there's two options. I'm hoping that the price might get there beforehand, but with the NFP news, either they're going to spike the price down here and give an RTO and fill this gap here, because this is the only gap really left. All right, and this area here is demand as well. It's quite a huge 1 minute demand zone, so it's all right. It looks like the 5 minute chart, even a 15 minute chart. So I'm expecting the price to get down here, and then we're going to have one more long. And this long should be the final long that USD CAD should do to continue the scenario that I was talking about. So nothing was wrong with the signal or the price action, but however, in the event of news, and this is why I always tell you guys, check the news every single day. Now it's my fault for not posting it, but I had a few one-to-ones to do and a couple other stuff to sort out. So I was trying to make sure that I do it all before I get a chance to come into the lesson. So I had literally Edgero and the rest of the guys and Javed. I hope they enjoyed it. I'm gonna put some of the recordings out for you guys as well, because some of those sessions with the guys just to help them get set up, I think it will be beneficial as well. And I add it to the Microsoft Teams thingy section of video. So I'm gonna make sure I do that because it was fantastic. So now, with this in mind, we only have one option: a short, then a long. If the price doesn't want to provide that, then we'll see. It still has respected the D1 validation point. I'm hoping the price will just dip below anyway. But this whole movement, this is why, you always have to keep your risk to 1% as much as you can. No matter how good the signal is, I always tell myself that, you know what, I'm still a participant in the market. No matter how much of market manipulation you understand, it doesn't protect you from losing a lot of money, possibly if you don't manage your risk. So for this spike that we've had down here, I'm concluding that this should be the final part of our, our long scenario. So I'm watching to see what happens here. And since we've had a massive manipulation bar on the 30-minute especially, and even on the M15 right here, I think the M15 one looks even better. This is a nice bull trap, so the price should be selling off and giving us an RTO. So stay clear for that. I'll give the signal tomorrow, 10 a.m., rise and shine, everybody be there. All right, and then we go from there. All right. So the other thing is pound CAD. So the pound CAD, the channels, we have the asymmetric channel and we also have the symmetric channel. I did both of them just in case for your view to make sure that you can grab both. So if you use the channel with the stop hunts, you can see what the price has done. Now you can see that this was a very manipulative move. We have a lot of accumulation and volume generation right here. If I use the normal straightforward one that we've had today, you can see that the price made it as though it was going to go long. And what is done instead is done a stop hunt of the previous day. Now, I knew the pound was going to go short. I preferred Pound USD because it was a lot more stable. But now that we have the stop hunt, this is exactly what we're looking for. I'm hoping tomorrow that even the price may give us an RTO and we can sell. The target, guys, is not going to be any further beneath this weekly previous low, which should give us the push for the long and then the major opportunity short. We're not losing sight of pound CAD short. It's still going to happen. But you can see that the market right now is in a very different phase. We're about to enter into Q2. We're the end of Q1 and things get, sticky when it gets to the end of a quarter, financial quarter. So keep your eyes peeled. Today I did something. I had an account or one of my accounts. I was just messing around with it. I kind of lost some money on it. I was just playing around and I got to £3.33. I'll show you guys the video. £3.33 all the way up to £52 trading silver. So I did what I was talking about because I had a 0.01 right at the top here. It was a very nice stop on H4 stop on MSB price cap entry, and I took it all the way. I closed it here, but I should have actually closed it here. It would have been a bit more. But I'm still in the gold trade of it. I took the gold version of it as a little experiment. But I'll show you guys the account results and everything. I'll make sure I do that. But it was nice to see. I was doing that. That's why I said Javed and Edgero were on the live session with me whilst I was doing it. Okay. And it was good. Yeah. It was really, really good. It was my Hugo's Way one that I just play around with. Okay. By the way. So I'm going to send that out and put the video because it was fun. It was nice to see. Let's do this. So pound CAD, be ready, guys. I'm going to go back to the symmetrical channel now because it's a bit easier to see. Stop hunt of the low. Even if the price doesn't RTO, what we really want is this low to be taken so we can get the trigger to go long, and then we're going to go short. So sooner or later, the opportunity is going to come along. It's taken a very long time, but sometimes the best opportunities do take a long time, just like the gold one. But you're just going to have to do what you got to do. So Euro US as well has sold off. Okay. It's almost hit the target that we wanted, which was 119.52. Now, this was a very mean stop hunt, but the price has done what it has to do, and it's almost going to hit the target. So we should leave this alone now until further notice. I'm still in Swiss franc Japanese yen on my other account. So stop hunt, market structure break, RTO, and then second pullback all the way down to here. But it's not done. It's still got a little bit more to go. If I do find a continuation entry, as I said, I'll give you guys the entry for sure. Um, and let's see what else. All right, so let me quickly recap on Pound USD. When I finish the lesson, guys, um, so if you, for those of you on YouTube, if you want to skip past this stuff, I'll make sure that I label it out so you can skip past the analysis part. We can go straight to the main lesson. But what we have going along here is the call was we had a stop hunt of the previous day. And this is what I mean by double stop hunts. And you really need to keep an eye on it. So here's the liquidity pool, here's the stop hunt, here's the market structure break, here's the RTO. The reason why I called the signal I did at the beginning is because I didn't write it out because I wanted to see if anybody was thinking that way. But what we had is an unfulfilled efficiency here. So when the price gave an RTO, it didn't enter into the order block, but started to sell. So knowing the market, it would spike back into the RTO fully. But then what we have is a spike right above the zone and just beneath it again, and then the massive sell. So we had an additional stop hunt of that day as well. So another form of a double stop hunt. Okay, but I told you guys to close, which I'm happy about because you would have been stopped out by this manipulative spike here. But then after, it would have been great to re-enter. But I stopped looking at USD, pound USD because I was on the lives. But if any of you caught this or you saw the price break back below this is one key. When the price breaks back below supply and then it returns here, you can use it as a reoptimization. Sometimes you've noticed that the price just goes past your zone and then right back down again. And this was a straight drop. Now it should hit the target, which is these triple lows here, and it was still a fantastic trade. But sadly, okay, it did another stop hunt. So if you caught on, you caught on. If you didn't catch on, keep studying, guys. Okay, and yeah, we can go from there. So I think those are the recaps I really wanted to say. But let's get on with the lesson now. So we were talking about silver, and I am going to do a silver analysis again of the price itself, a technical one. Let me grab silver USD if I can get it over here. Then we're going to go with the lesson. But today's a bit more proactive. I just want to give you some tips. I might not take too long. We might actually not do a whole hour. I might make it a lot shorter. But I just want to do some tips on what you can do to finding assets. Okay. Now, because this is a series, I'm not going to go through every type of assets, but I'm going to stick within the financial field of things like, cryptocurrencies, different things like that. And we're just going to have a look at them and see what values we can pull out from them. I think with silver, as I've discussed it, we still have more to do, but I'm going to cycle around, just recap from the end of the lesson. So let me put this out here and we can do the silver analysis. So assets, let's go for, let me put this here, silver recap. So let's do a recap from last lesson just quickly. So the major points when we're looking at silver is what to look for, where to buy, and things like that. So, I mean, it leans into this lesson because when you're looking at an asset, okay, and I can merge these together. So finding assets. When you're finding assets, there's a whole load of things. Of course, the price is important, but there's a whole load of things to look for. So if I use silver as an example, the first thing you want to go for is you want to know the use case, okay, of the asset. So use case of assets. All right. Now, when the newsletter comes out, there'll be some goodies in there as well for silver. So for those of you who subscribed on YouTube or through the email stuff, okay, you'll be able to read it too. I hope you guys enjoy. And students, you guys have access to it, as you know, as well. So it should be out by 6, or it might be a little bit delayed because of the server, but around about 6 o'clock. Okay. So you want to go for the use case of the asset. That's the first thing. And then, of course, you want to go for cost of, actually, I'll change the order. Let's go for rarity. Okay. How rare is it? Because the rarity creates, as I said, a supply and demand. Okay. The fact that many people can't have it, okay, is one of the biggest things that are important, or is expensive, or the barrier to entry is high. Okay. So of course the price of acquisition. All right. And then after, we want to look at the fungibility. Now, fungibility, as I talk about cryptos as we move forward, with these lessons. Okay. I'll go into more detail because we can talk about non-NFTs, non-fungible tokens, and what they are, how they work. Because right now that market is really popping, and there's a lot of money involved in there. Okay, and even as traders, for those of you who are aspiring traders, who you may not be a part of the school, you are a part of our school. It's important that once you start to make money, you know, what are you going to do with the money? Okay, and it has to be past paying bills. It has to be where you're going to invest or how you're going to make your money become your employee. Like I said 2 lessons ago, uh, talking about Robert Kiyosaki's triangle or square or quadrant, the best way to make money work is when it's your employee. You want to hire money out to do the job for you in the form of, assets that you can invest in. So we want the use case of the asset, the rarity, the price of acquisition, because that is important too. And then after, we want to work out fungibility. All right. So I'm going to put these here. So if you're taking notes, you can write these out. Okay. Now what I want to do is that I have my fourth laptop, which is a pen laptop. I just didn't set it up today, but I think I might do something where I might start to write things out on like a whiteboard kind of style, digital whiteboard. See how that goes. Okay. But when we're finding assets, these are the most important things. So for example, there is a few more things that you need to look at, but I'm going to go through it. So if we go from silver and look at silver as a recap, so as we're talking about, so what are the use cases for silver? So number one, okay, solar energy. Okay, I'll put this here, green energy, solar panels. So when it comes to use cases, we can break it down even into more use cases. We can have present use cases or emerging use cases. All right. So if I was to put this here, the two types of use cases that you can look at is the emerging use case or the current use case. Okay. So emerging use cases will be in green energy because green energy itself is in an emerging industry. So one of the key signs, and I'm going to put a tip here for you guys. I always love to share, so I think it's right for me to say this from the get-go. I want to write this here. Tip: always look for an asset that is heavily or instrumental in an emerging. Okay, I need to put this here. So one of the things you want to do is I'm going to put this tip here so that you can have some fun with this and start to look around. I am going to open up Google and we're going to go through some stuff, but always look for assets that are instrumental in an emerging market. Emerging market. All right. So emerging markets, okay, I will go through those in more detail. Now you can do your research on checking out emerging markets. What do they mean? But I'll be breaking it down into a very easy to understand way and just nice and easy tips that you can take home with you and start to practice. As to look for emerging markets that are, available for us to be able to get access to. So when it comes to use cases, we want to go for emerging use cases and the current use cases. So green energy, will call that something that's more of an emerging market because it's not mainstream yet. The only way green energy is going to be, well, I mean, there's two sides to it. We know, for those of you who, listen to anything to do with climate science or climate change scientists, you know, a lot of the predictions about when the oil of the world is going to dry up, or, some say 50 years, some say 40. I think 10 years ago it was 50, so roughly about 40 years. Some countries have simply import oil only because they've run out of their own reserves. There's a whole load of um, different estimates as to how or why or how or when, stuff like oil and coal is going to run out. Okay, for now there is still a good amount. Okay, but the reason for this market in the first place, and it's good for you to find the reasons, because of this situation with climate change is affecting um, the world we live in, and it's also in very limited supply. Compared to something like the sun, which has, I think, his lifetime, it has about 6 million years left before it's going to explode and become something else. Okay, so this is one reason for it. Number two, healthcare. Okay, so healthcare, and I'm going to put this, we have different types, so we can have it in, um, I'm going to put in technological appliances. And then, as I was saying, also in medicines, oh, I spelled appliances wrong. Okay, so we have medical appliances. And then number three, we also have, let's put this here, healthcare from the aspect of, okay, medicinal, let's put medicines. All right. So these are the healthcare ones that are current ones. And of course, because the industry is always expanding, okay, uh, for example, there's some industries that don't expand. For example, not online education, but the education system, okay, for those of you who don't know, if it changes every 50 years roughly, that's when there's an update made, okay. But the education system does require things they need, tables, chairs, books, things like that. But silver, for example, probably wouldn't be required as much unless it's highly specific for science. So there wouldn't be much of a use case. So something like the industry of education wouldn't have a high demand for silver because there isn't a high need for it. Okay, just to give a good example. All right, number four, okay, is in jewelry. Jewelry. Oh, jewelry. All right, so wedding rings, engagement rings, chains, things like that. There's still that need for things in jewelry, and there's others, but these are the ones I spoke about. Okay, so when we're looking at these things, when we're looking at the use cases for the assets, we need to ascertain to, okay, one of the best plays would be something that may not be, it has rarity to it, it is necessary, it has a use case, and as time goes on, is only going to be more and more needed because it has the next thing, okay, which is, I'll put this here, supply and demand factors. Okay. So with the rarity, the next thing you want to look at is your supply and demand factors in the sense that, for example, we know that from the last lesson that silver, okay, as opposed to gold, has more use cases because of its chemical structure. Now you don't have to be a scientist. Okay. For me, thank God I did my degree in chemistry and pharmaceutical sciences, my master's. So all the science is still locked in my head somewhere. But we know that the chemistry, let's put this here, chemistry of silver, okay, not completely inert like gold. Okay. So when it comes to the chemistry of silver, it's not completely inert like gold because we know, okay, let me put this here. So with the supply and demand factors, if you have something that's not completely inert like gold, then it can be used. Okay, and this is a key here. When you look at things like silver and gold is, okay, can be used, and I'm going to put the in capitals here, just to, I said it last week, but I'll say it again, irreversibly. Okay. Silver, as I was talking about last week, because of the chemical properties that it has, is not as inert as gold is. Now, silver is quite inert, it's quite stable at, quite a range of temperatures. However, silver can still react in air, okay, because of sulfur in the air, unlike gold, which doesn't. And silver, therefore, can have a degree of reducing its value because it can get a green tinge on it. Now, if any of you have ever seen silver that has a green tinge, okay, that's from sulfur, okay. Now, of course, it depends on the quality of the silver as well and the refining process, but silver does take a while for it to have that effect, but that slight inertness compared to gold does make it a much better option for it to be used for places where silver, you need something that's a very, most of the time, inert substance or very stable substance in things like healthcare. Because, for example, silver, You don't want to be silver is something you can use for like, silver enamels, or if you want to put silver in your teeth in the medical industry, you know, it's either, if you notice, it's either silver or gold. And it's not usually because of the beauty or what gold, looks like, how some people have, I know, styles that you can put things in your teeth to make it look, you know, make you look richer. But silver, the chemistry of it is very safe because it doesn't react with your mouth, because you don't want to have silver metal running through your body, because if you do get silver poisoning, it could kill you. Okay, if silver is in the correct form. All right, so you wouldn't put something like, let's say, mercury, which is a liquid at room temperature, although it is still shiny and you can actually do things with it. It's probably not a good idea. Okay, and for those of you who, they used to put things like mercury inside of things to do with your teeth, but they removed it because of mercury poisoning, and people were starting to get very ill, and some even died. So they changed to silver. But this was many, many years ago. So the chemistry is important when you look at these factors. Okay. Now it doesn't mean you have to go and do a deep study on the chemistry of it, but you just want to have that in mind, because this irreversible property is very important, because what it means, to be technical about it, is that means that the supply curve, okay, compared to the demand curve, is always going to be oppositely correlated. Oppositely correlated. As the demand goes up, okay, the supply will go down, but then it's going to continue to drop down, because some of the uses for silver are irreversible. Now, some you probably can get it back, but especially in, I would say, chemical industries, especially from my background, there's some, we used to use silver in the lab, and that silver is not very easy. It costs more money, okay, to extract that silver than it is for the silver itself. And so it doesn't make any sense to actually be able to do it. Now, in theory, you probably can get every silver, but some silver is burnt, and possibly if at high temperatures, who knows, it may become a gas. And if it becomes a gas and it escapes from the atmosphere, that silver has left the earth forever. Okay. And that is possible to happen in some scenarios. So you have to think about these things when you're picking an asset. Okay. So price of acquisition. Okay. So in other words, you want to find out your barrier to entry. Okay. Barrier to entry. Now, just to recap from the last lesson as to what I said, now there's different ways to acquire silver, and I'm going to put the fifth thing that you need to look at. All right, you need to look at the laws of holding. Okay, so the laws of holding, or the laws in your country or in your local area, as to how are you allowed to hold this asset, and not that you want to be somebody who goes against the law. But if the law is not supporting you holding onto assets, because the truth is most governments are afraid of their people holding true money, okay, you may be required to have to do things in order for your assets to be safe and untouched. And this can even go down to things like, if you have a company, for example, I have more than one company, and in certain type of companies, okay, and I probably will maybe go through this in an entrepreneurship class. We are going to start the entrepreneurial forex series soon. Still working on it, but one of the important things is that how you set up your company is important when it comes to liabilities. Because, for example, let's give an easy example. Let's say you have a limited company with somebody else, and they're both directors, and let's say that director does a crazy thing and maybe, I don't know, runs into a lamppost or hits a person, okay? When it comes to the actual breakdown of everything, and because he has a company, when it comes to things like costs and things like that, you and the man that you're working with, if it's two guys, are both liable, okay? Because of the way the company is set up. So a lot of the things to do with shell companies and offshore accounts and things like that, I know that sometimes it seems as though the rich are just trying to be greedy, but sometimes the law doesn't create sometimes the law is not conducive for you to be financially free, and I don't mind saying this for live, for YouTube, or anything. It's just the truth. And so this is one of the biggest things. Now, I can't go through all of this today because there's so much to say that I could say, but we're just going to go through this. What we want to do is just go into looking for different ways we can find um, go through finding assets. Then I'll end with a silver and gold analysis so that we can know what to do with in this regard. So barrier to entry. Now, what we had with silver, from the recap, is we have three major ways you can get silver. You can get silver bars, okay, and they come in different sizes. And then you can get silver coins, okay. So silver coins, And then also we have so silver bars, silver coins, and then silver in the form of jewelry. Jewelry. So I think what I'll do, let me bring this out over here because we do need a bit more space than what we have. So I'll put this here, silver bars, silver coins, and silver jewelry. Okay. And then price of acquisition. So these are the three things that we will go for when we're looking at these prices of acquisition. So from the silver bars, as I spoke about, when we're looking at the barrier to entry, okay, we want to find out, or you want to find out. Now, sometimes the barrier to entry can, the most obvious one will be money, but sometimes it might not be money. Also, it could be things like space, storage. Okay. So I'll write down here what the barriers to entry can be because I spoke about it, but not in deep detail. So money is one, and you have to think about that because even though you're investing, you don't want to go crazy. You want to make sure that is reasonable because every investment has a risk attached to it. Otherwise, you won't be able to have any reward in any way. So money, storage, possibly. I'll say and location, or I would say location or locality. I'll say these are the three major things. When I look at assets, this is what I think about. So the locality, how close is it to me? How easy is it for me to, let me put here so that it makes sense. Ease of acquisition. Okay. So these are the things. So things like silver, coins, bars, or whatever other assets you're looking at, you want to be able to work out the barrier to entry is money, storage, and locality. It can be all of these things if one of two or three of these things, or none of these things at all. Okay. So when you're looking at your assets, you want to look at all of the different aspects because assets are something that's supposed to generate you the currency of the day. And usually, like I spoke about last week, there's different ways and methods of how you can, uh, how you hold assets, and we have to consider those things too. I will go through that. So when we talked about silver coins, what was the benefits? So I'll put the positives. Okay, I'll put the positives for each right here. Then we can put the negatives underneath. Now after I do this, we're going to switch to Google and we're going to look at some assets. Now what I want to do today is I wanted to open the floor, okay, to everybody, because I feel like I do a lot of talking and I don't mean to. I really want to make sure I help you guys with whatever I have. I need to change positives because it's missing an I. So excuse me, guys, I didn't mean to do that. So if you guys have any assets or anything that you think is an asset that you would like to have some clarity on, we can have a look at it. Okay. I would like to do that. So I'll leave the floor open after I finish. I'm just going to give you a few tips. I'll write the theory out using MetaTrader, and then after we'll go and do a few examples. If you guys have any questions about something you want to look at. Now, it's not financial advice. I'm simply going to give you my suggestions, and then we can go from here. So the negatives and the positives of silver bars. So positives of silver bars, one of the things when it comes to purchasing, you're going to have low premiums. Okay. Now, low premiums, what that means is, sorry, low premiums. So when we look at low premiums, we're talking about the spread price. Now, the brokers who you can call them brokers, but the companies, bullion banks, or just simply um, sellers of gold and silver and different assets of that nature. Okay, when they're selling us silver, okay, one of the guidelines they have to abide to is that they need to make sure that they follow the spot price, okay, to a certain degree. Now, just how we have a broker where we have assets that we can look at to trade, and we have the spread price, we have the ask and the bid, so do all of the companies that sell things like silver and gold to us. Okay, so low premiums means we have low spread. Okay, so the low difference between market price and the actual price. So I'm going to put this here, low spread. Okay, all right. Now silver bars you would expect them to be more popular, but they're not actually as popular as silver coins. Okay. Now the reason why it's not like that is because silver coins have a special property that many other uh, forms of silver don't, which is capital gains tax, or is CGT exempt. So whenever you're looking at, as I said last time, guys, I gave out the links and I believe I posted them. If I haven't posted them on the teams, I'll make sure I post them again. I might have forgotten to, and I apologize, guys. So many things going on. But we have capital gains tax exempt. Okay. This is the law at the moment. It might change, but for now, this is the law. So leaning off of that positive, the obvious negative now is that because companies know this is more of a lucrative uh, form of investing in silver, then the negative side is that you're going to pay a lot more higher premiums, sometimes 8 to 10% more than the actual market price. So high premiums, okay? Sometimes even as high as 15%. So I'll say 8 to 15%, depending on the company, right? Very high premiums because with you have no capital gains tax, then you don't have to wait out a very long time before you make some profit from silver because you're buying it at the spot price. Okay, yeah, maybe 8 to 15%. But if you put it this way, for you to gain 8% on the price of the silver you bought at compared to maybe 20 or 30%, with silver bars, once you buy them, you're stuck with them for a long time. Whether the price goes up or down, of course, you're going to be holding them and they eventually should gradually grow up in percentage. But I've seen some people, even for example, with gold, have to pay 40% on bullion tax. Okay, so before they even break even, the price has to have grown on their initial investment by 40% for them to break even with gold bars. Okay. And so you can see here why it's such a lucrative um, way to invest in silver. And personally, this is what I do. Okay. Now, for those of you, the students, we have one more challenge left. So if you haven't, make sure you've copied the challenge down. 6 p.m. tomorrow. All right. Whoever wins, we did the first one. That was a tough one and a close one. I couldn't even decide. I had to let the hat decide. But this time, I'm going to pick a winner in deep detail and explain why. So, um, I'll make sure I do that. So let me drag this here. All right. So what's the negatives of silver bars? Okay, so one of the biggest negatives of bars is purity level. Sometimes you find as the bars get larger, okay, purity level not as high as other forms of silver. Okay. So we have things like, for example, industrial bars, which they can be purified later on. But sometimes when you buy silver bars, you may have to pay a premium on top, but sometimes with the bars, you find, for example, let's say the 1,000 kg, that 1,000 gram bar, excuse me, or even the 1,000 kg bar. I believe there is a 1 ton bar or something like that. But the massive bars that they form, okay, no, 1 kg, not 1,000, excuse me, 1,000 gram bar, 1 kg bar, same thing. So the 1 kilogram bar, quite big, okay. Sometimes the purity is not as high, and usually the reason why is because they're in storage. When they're going to be used or sold off to companies, people who hold on to those massive bars are going to be sending enough to be purified first and then be resent. Okay, so you notice sometimes, not all the time, but in some cases, you don't get the same level of purity as a coin as you would get on a coin. So you kind of compensate for that lower purity with higher premiums, and also you get the benefit of not paying any tax on your coins. Okay, and so this is why coins are always out of stocks compared to bars all the time, especially if we're in the UK for where we are now. Jewelry, all right. The positives with jewelry is that it has one thing that I said before, which it has an added piece of value. So an added value, which is an asset itself, which is craftsmanship. Okay, so one thing about jewelry, even though let me put this here, one thing about jewelry, even though I wouldn't go to the shop to buy jewelry because we'll see in a moment that the negative side of this is that because there's craftsmanship added, there's many levels in the conveyor belt. So silver jewelry goes through a lot of processing, and every level has its own payment you have to pay. Not that you see the payment, you just pay for it in one go. Maybe the necklace, silver necklace, is £150, but then, from the beginning to where it has, the price has been magnified because this person's taken their cut for their what services, then another one for handling, then for shipping. So all of those things get added on. So you get added costs along the way before you get there. So you could wait a while before you make some real profit. So it's actually a bit hard to tell with jewelry sometimes if you've actually made a profit off of the silver. But the big overriding benefit, I'll say, is that the added value or the added value to its craftsmanship. And craftsmanship gives it this property, which I talk about here, which is sometimes, not all the time, but the NFT or the non-fungibility. It has the ability to have non-fungibility. So do silver coins as well. Okay, because you can have silver coins that have a special theme behind them, fungibility. All right. So when you're looking at silver jewelry, okay, one of the things you want to look at if you're a jewelry investor, okay, of course you want to look at the costs, but then you want to think about this, is that how can this be provided? For example, let's say a 1913. Okay, I put this here. Sorry, one of the students. I think that's Marlon actually. Yeah. So when we look at things like silver jewelry, what I like to think about is not, of course, not for now, but how can this be something that's has non-fungibility? So for the example I gave last time, let's say there's a World War factory that makes teacups, and all of these teacups, um, go for $20, and they were made for people to use at home. But then maybe the queen has the same one, but she drank from it, and that cup has been left in the cupboard for 80 years. Now, if you were to sell that cup, because it has added value, because the queen drank from that cup, or it has a special signature from the queen on there, the value of it is, maybe 100 times more than the normal cup. So instead of selling for $20 in, 2021, it could sell for, so in 20, instead of $20, it could be 2,000, 20,000, depending on what the value. Now, one great thing about jewelry is that the value is perceived. So if you know how to market well, especially if you're going to sell it, you can actually debate on the value based on your salesmanship, okay, and stuff like that, and also the craftsmanship if you get it um, worked on for it to have even more beauty to it. So that is the biggest positive benefit when it comes to silver jewelry. So don't discount it. It's just something you need to think about when you're going to invest in silver, because at the end of the day, somebody may buy it for an asset, but most likely, as silver becomes more and more scarce, people will just take the silver and melt it. Okay. So the negatives is um, underlying processes or processing costs from different processes. Okay. So underlying processing costs from different processes. These are the things that you have to think about. So this is silver. So now that you have an outline using silver, what we're going to do, okay, we still have to look at fungibility a bit more and the laws of holding, which I won't do today. Okay. I wanted to make this lesson kind of short and sweet and something that you can take home. So what we're going to do for the last 11 minutes, I'm just going to lay out quickly what you want to look for when you're finding assets. So you've got this. I'm just going to split them into categories, or I can actually do it just here. So I'm going to leave it down here, and then we're going to go to Google Chrome. So get your assets ready. If you guys have any assets you want to look at or what you think is an asset, please type them in the comments. Feel free. And then after, we can look at some. Okay, and I'll do one example, and then we go from here. So looking at assets, I'll say the 3-step plan to go for. 3-step plan. So the 3-step plan is, of course, you're going to take on these 5 points. I call them the 5 pillars. Okay. There's actually more than that, but for this lesson, we have the 5 pillars of assets we want to look at. Study the 5 pillars of assets. Okay. So we have the 5 pillars. So the price of acquisition, use case of the asset, rarity, fungibility, and the laws of holding. Those are the 5 things. And there's some added things we can talk about in the next lessons that would help. And these already will give you a very good picture, because if they don't tick all the boxes on these areas here, it might not be an asset for you to invest in for you. Okay. And it may not even be that it's a bad asset, it just might not be for you. The key about investing is that you always have to get things that are for you and work for you, work for your family in every single way. So you want to study the 5 pillars of assets. So I'll put this here. When looking at the potential. Okay. So that's that part. Okay. Second thing you want to do now is that you want to, once you've looked at the asset, okay, you want to, and for you to understand this, you have to go back to last lesson. Okay. Decide on your holding style. Okay. So the holding style, okay, you want to go through the holding style. And when you're looking at the holding style, you want to look and decide on your holding system. Okay. At the end of the lesson, I think it's a short 38-minute lesson, something like that. It should be up on YouTube and also up on the student area too. So you want to decide your holding system. How are you going to hold that asset? What's your plans with it? And then number three, before you get in, all right, you want to do a technical analysis. Okay. Sentimental analysis. Okay. And then after, you want to do some fundamental analysis. So if you put this here, technical fundamental, or TFS for short, if you want to remember it that way and put it this way. So your TFS analysis, sentiment. Now, sentimental analysis, when it comes to looking at price charts, only matters when it comes to things that are commodities. So oil, gas, but for other things, the system is different. So you're going to have to see the difference. But technical, fundamental, sentimental analysis. These are these things here. All right. Here we go. So here's the three things to go for. And when we look at these three things, it gives us the three-step plan that we can go by. So if you have your assets ready, type them in the chat. If you don't, I'm going to go for a simple example, and then after we can go from here. All right. So I'm going to switch screens. All right. I've got Google open. Let's have a look. All right. So in full screen mode. So if we're looking at an asset, let's just do an easy one. So let's go for here, gold. So you can see my searches, I look at gold deposits all the time. Okay. So if I remove it so that there's no bias, okay, let's just type in gold. So the first thing you want to do, we know that gold is an asset. Okay. So we've done the research on gold, and we want to, let's start from the chart perspective. So one of the best places I would say to go for when it comes to anything to do with gold is, let's say, trading view. Okay. Trading view. All right. So on trading view, open it up. Now, one good thing about trading view that I like is that it does have news attached to it, but you do have to go and find your news yourself. Okay. So let's give a good simple example. We're looking at gold. Okay. And what you want to do is you want to make notes from, now the technical thing you will do last. Okay. But we'll do it first. So I'm going to pull up gold on trading view instead here. Let's get this up. All right. Wait for it to load. Now, one thing that is a tip that I would give to you guys is when you're looking at gold, okay, there's two sides to investing in gold and in silver specifically. Now, you can look at gold stocks, and you can also look at gold, the asset. Now, if you think of it this way, and I'm going to give you this as a tip, okay, the people who mine the gold, okay, are just as important than the gold itself. Now, if you look at their shares or their stocks and shares, or you look at the share price of their stock, all right, instead of, if the barrier for entry for gold was too high, because you have to look at the price, we can look at their stock price. So I'm going to do gold analysis, but let's look at, for example, a very well known one, Barrick Gold. Okay, so I'm going to open up Barrick Gold, put this here. So first things first, when you're choosing an asset for gold and silver in that category, you can either choose to go down the road of the mining company, okay, who mines the gold, or you can go down the road of buying gold itself. Now, until you decide what your reason for gaining or getting involved in gold and silver and what your purposes are, then you'll be able to make a decision whether you're going to get into the stocks or into gold, or you're going to diversify and do both. But I'm just going to go through this. Okay. Now, we know that the gold standard system, as I've discussed, we're in a stage where currency devaluation is going to happen. On Monday's night session, when I went over the recap, when we're looking at currency pairs for the week we're going to trade, but when I went through the situation with gold and the parabolics and things like that, okay, by the nature of gold and silver, they and all other assets in the category that has scarcity, their price should go up over time. So what could we do instead? All right. So if I was to look at Barrick Gold and I just pulled up gold and I looked at this stock, first thing I would do maybe is to look at it from a technical standpoint. Now, even though technical tells you about the price, it also tells you a very deep picture as to the company's health. Because at the end of the day, the price of Barrick Gold, okay, and having shares in Barrick Gold, it really does depend. The price really does depend on the earnings reports and things like that. Okay. So if you're looking at stocks, you do have to have that information and on hand as well to find out about the company. Okay. Now, one important thing to look at from my memory, if you remember from gold, and I'm pull up gold's chart. Let me see if I can, if I copy and paste this quickly. Copy, paste, and enter. I'm going to copy this chart over and put the gold chart. All right, and we're going to look at a comparison between the two. Then we're going to look at the company. We're going to look at how much gold is being mined, things like that. Let's see how we're doing for time. I won't take too long. Okay, this is just a very simple example. So pull this up here and let's get gold. All right. So what I like to use TradingView for this because TradingView has probably the best access to so many different assets. So if we go from gold, because we're looking at this from purchasing, we're going to use Forex. So we can find gold, or we can just type in gold USD or XAU USD, and then go for all. Then you should be able to capture it that way, XAU USD. There we go. So we can either use any of these, Saxo or any of them. I'll use Saxo, it's okay. They're all good. All right, so let's look over the same period. All right. So without going too deep into the technicals, we'll look at gold and we can see that, let's look at this last period here. I'll pull up 2008, get this line up here, trend line tools, vertical line. All right, so let's choose a period. I'm choosing 2008 because that's a key period when, or 2007 when we had the financial crash. So if I get another one, get that line here. Let's look at this period and let's correlate it to Barrick Gold also. So here's that. Now, TradingView is free, by the way, guys. You can sign up to TradingView with an account and get started here. So let's look at the same period here. So 2007, let's get this up here. And let's go to 2011. All right. So we look at this range of price now. If you're gonna choose this now, this is specifically gold and silver. You can either be in the mining company, or you can own what they mine. Now, in the both use cases, it might be wise to have both. This is my own opinion, okay, but it's up to you at the end of the day. Please see a financial advisor for your final decisions, because I'm not a financial advisor. But I would say to you that it would be wise to look at both angles. Reason being, let's look at the periods here. So during 2007, we see that the share price of Barrick Gold was about $17. And when gold made a new all-time high in 2011 during this financial crash period, okay, we see that the price went from $17 all the way to 55, which is about a 3x return. Okay. Now, with something like a share, intrinsically, because you need to put currency in to get currency out, okay, now the company you can say is an asset, okay, but what you're going to get from the company is going to be money in and money out. So you get one form of exchange. When it comes to gold, first of all, let's just look at the period of time. So from 2007, we saw the gold price rise from $660 all the way up to $1,911, $21.20. So that was the new all-time high, roughly. So in this period of time, now the barrier to entry was a lot easier if you got into the mining compared to the gold itself. Okay. But then the thing is, when you put silver, when you put, sorry, not silver, when you put currency into the system to purchase gold, you're exchanging, and this is important, you're exchanging a currency for a physical asset that you can hold, you can feel, you can touch. Okay. Whereas with a share, I guess you can have a share certificate, but it's still, you're exchanging currency for currency. Because if you were to take money out of this system, okay, then you're gonna, when you take the money out of this system, you're not gonna get a brick of, Barrick gold. You're gonna get, in this case, if you had bought one share for $17, if you sold it at 55, then you're going to get $55 back into your account. Okay. And so this is something you have to consider. Now, because gold is going to be around as long as people are going to be around, then we can kind of ascertain that Barrick Gold is going to be around for a very long time because they're mining something that people want. So when it comes to your play, one of the things to think about, okay, in these 5 laws is you want to think about, and also your acquisition, you want to think about what way can I get in to do with the industry of gold, because gold will increase in its use cases, okay, as time goes on. And when it does so, okay, these companies will make a lot more money because there's going to be a higher demand for their services, which means, a whole load of, more money and a whole load of things in that manner. So when you're looking at this now, the barrier to entry is a lot lower here, but in this system, you have currency for currency. But maybe you might want to use the system to get more currency so that you can convert your currency into assets. Because remember, currency, because it's fiat, there's no gold back in the system. There's no real financial asset back in that currency. And so it's only, even though right now the government says it's worth this or another government says it's worth this amount, but if a currency devaluation comes, which is inevitable, then even if the share price goes up to $55, okay, it might be able to save you a bit, but nothing will save you like having the actual assets. So this is something you want to think about. So just from simple analysis, when it comes to specifically gold and silver, things like land, it's a bit of a different picture, but since we're on this topic, we would look at that. Okay. So from the technical analysis, now based on your style of technical analysis, I'm not going to do a deep one. You'd want to look at the market structure of the trend. That's one thing. So I'll put this here for the technicals. Um, put some notes out. Let's put some notes here. So where is the textbooks? Here we go. So if I put the textbooks up, so from this aspect here, I'm just going to put technicals, technical analysis for gold and silver. Okay. Okay. Now, first thing you want to do is when you're looking at technical analysis for gold and silver and related shares or related stocks, number one, you want to look for correlation or correlation strength between uh, periods. I just put correlation between the gold and silver price action and the stocks price action. Sorry, guys, price action. So when we're looking at this, one of the biggest things, now I'm taking technical analysis from a lighter view. We're just looking at the things to pick up on. So when you see a company who has a very strong correlation with gold and silver and they're a mining company, that is a good sign. If they don't have a good correlation with gold and silver, then that means that fundamentally as a company, there's some things going wrong. Maybe they're not getting enough gold and silver to meet quotas. There could be a lot of maybe possibly issues financially going on there. Okay, so one of the crazy, not crazy, one of the greatest I was meant to say, but my mind is running at a million miles per hour. One of the greatest things you can do is to look at the actual asset itself and then look at the mining company who, of course, we know is mining that asset and see the correlation to see what goes on there, to see the important period. So I'll give some key pointers here. So I'll say keys, key points in history, excuse me. Okay, to look at would be financial crisis, so crashes, okay, financial booms, okay, so growth periods. And I'll say one other thing that I look for, okay, all right, is the effect, I'll say the cross effect of fundamental news on technical price. All right. So the cross effect, what that means is, and this is in my own language to explain it. So let's say I know that Barrick Gold is not the be all and end all. Now you still need to do deeper analysis because with the stock side of things, I'll explain in a minute what you have to look at. But one of the things is if there's some major news about gold, okay, some companies, especially things like Barrick Gold, who have, you know, a very big market share in the business of mining, it should affect their stock slightly, or you should see some sort of effect. Not all the time, but if you see that kind of effect, then you know that they're very gold sensitive, which means, of course, because they're mining, it means that, as a company, they're in the forefront. They have a big market share, which is good. You want somebody who has a high customer base, a high demand for it. Okay. So these are the things to put out when you look at technical analysis. And of course, after this, all right, I'll put the typical things. So you want to look at market structure. Okay. For the larger time frame bias. Okay. Now 3, I'm going to put this here, market structure of the intraday. I'm going to be intraday and intra-week trends. Okay. And number 4, from usually your final decision for investing is going to be a combination of things. But when you're looking for the best and most accurate price, especially if you're a trader, number 4 is that market structure analysis for entry. Okay. So sometimes I had a call with a woman yesterday, like one of my investors, and I said to her that trading and investing, one of the biggest differences is that investing in something is like trading in slow motion. Okay. So the same rules apply. If you can use your skills from trading in reading the market to get into assets at the best price, you've done a fantastic job. So market analysis for entry. Okay. In other words, if you want to get the best for your money, okay, then this is one of the things you have to do. Now, I will go through things like dollar cost averaging because you're not always going to get the same entry. It may be where you acquire the asset from might not give the same price and stuff. So you want to do dollar cost averaging. I'll do those things, I promise. But these are just from a technical standpoint that we're looking at when we're looking at an asset. So further into gold, all right? Now, the other research you're going to look at, those 5 pillars, you can go to different places to find out, all right, what's going on. So sometimes on with TradingView, sometimes news comes up and you can see earnings report comes up over here as well that you can look at. It has quite good financials. So you can see one reason why I like it for completely for free, not that you can use this only, all right, but then this is one of the things that you can do. So let's just say now, all right, the barrier to entry to gold was too high because right now to have a substantial amount of gold is going to cost you $1,697. So about 1,200 or £1,100, okay, something or maybe a bit more. All right, so let's say that the barrier to entry was high. So your short-term play now, And this is a key here. So if you want to get more money to get the asset, but you want to get a substantial amount of news, you can't. One of the biggest things you can do is what I say is try to go for, I wouldn't call it a like for like, but I'm going to put this here. I'll just write it out. Okay. So when the barrier to entry is too high for a commodity type asset, specifically a commodity type asset, okay, okay, look to enter via stocks who produce, mine, okay, transport as well, that asset. With the transport would be the weakest ones, or I'm going to put in here with transport, um, especially, okay. So specially transports that asset, for example. So they're like gold merchants. They if there's a company like that, you know what? Let me move this and put transport somewhere else. So just produces or mines, just to save from confusion. All right. So in this case, e.g., Barrick Gold instead of gold. Now, when you do this, what's the gameplay here? Quite nice and logical, and it's something that you can always think about whenever you're looking to, so that you don't get discouraged, so that you can still have an opportunity to get into something. Okay, is all right. Okay, what the strategy I call this is strat. So this is a very simple strategy. Okay, like for like in investing. Okay, so like for like investing. Okay, so the first thing you're gonna do, of course, is get into an asset um, stock equivalents. All right. Number two, hold until you create enough cash flow or profit to switch investment over into the actual asset. Just two things. So this is something that, before I came to the lesson, I was thinking about what are the things that I do that I can help you. As I said, these lessons are conversations, so I always want to share from my heart. And this is something that I do all the time. If the barrier for entry is too high, or sometimes the barrier for entry is high, and also the growth rate. Now, this is more advanced than we'll do in the other lesson, but if you look over the period of time, 610 to 1923 is great, okay? But in terms of when it comes to percentage, if you put £100, okay, into now let's say if you put £100 into Barrick Gold, which probably be easier to get £100 worth of gold. Now it's possible to get that, but it's a lot more difficult to get £100 worth of gold compared to £100 worth of Barrick Gold stock, okay? And if you do get that, then that's cool. But if you don't get that, then at least you can go from £100 to $300, and your aim is not to be holding the share, okay, but rather your aim is to gain enough money so that you can get into the asset that you want, okay. That's a very simple strategy, which I personally call like for like, okay, and I use it so that I can get into certain commodities that are too high. For example, if you want to get into palladium or platinum, which are also um, uh, similar to silver and gold with their rarity, and well, maybe not their chemistry, but just the rarity side of them. But they also have high value. So if you can find a company that does so, then you can get in. You can see that is a lot easier, especially even for example now, to get into Barrick Gold compared to getting into, is about at least 50 times or 40 times more expensive or something, at least for during this same boom period. And during this boom period, we know that this is the time where we had the 2008 financial crash. And so people didn't trust money and they put their money into gold, which pushed the price up even further. And now we're in one. And as we talked about on Monday, we're about to get the next parabolic movement very soon. Okay. So if you couldn't get into gold, but you really want to, you can do something like this. Now, to end off, I'll introduce Barrick Gold a little bit. Let's just have a look at their company. So with TradingView, why I like it, very simple. Now, of course, you can do your own research outside of it. It has technicals here. I would say personally, not to follow any of the technicals that you see, okay, because this is algorithmically generated. Not that they have anything against, they don't have anything, against you to. You have to put it this way: TradingView doesn't have any interest to give you uh, the wrong direction, okay, they wouldn't do that to you because they don't have any interest. Maybe a broker might try to do something like that. Now you can connect your account to TradingView with certain brokers, and you can place a trade on here, and it will show up on your brokerage account with about 5 different brokers. But even then, TradingView wouldn't want to try to give you bad technicals. But the reason for not doing this is because you want to follow what you know with your technical analysis. If your match is up to be the same, then that's cool. Okay, but this is just based on what it sees and things like that, the performance and etc. Of the price. So what I would say is, keep your eyes on it. Look at the price for yourself, and let's look at this. So let's go to barrickgold.com. So what we're looking for, all right. So with barrickgold.com, now what you want to do, there's two things. But if you're just looking at the company first, okay, we'll go for just the company. So when we're looking at Barrick Gold, first thing you want to look for, all right, is you want to go to key documents. So if you're taking notes, write this down. First thing you want to go through is the key documents. And what you want to look for is one, annual report. Okay. I won't go into deep detail, but I'm going to go through just a few things here. So whenever you're looking to invest in a company, make sure they actually have these things here, because if they, well, in order for them to be listed, they need to have these, otherwise they wouldn't be listed. Very highly unlikely. Okay. Yeah. So you look at the reports, it's 63 pages long, but the main thing that you want to go for is to look at the numbers. Okay. So this is Q4. All right. Here's the annual report, which is the best. Now with the annual report, I'm going to go from the table of contents and just pick out things you need to go for. Okay. So now they've done it in a nice way where they have it set out geographically. So this is one thing that you'd want to look at when it comes to geographic. So something like this, one of the things you want to note down, okay, to understand their place in the world is how much ownership they have of different mines. Okay. These are some of the things that you want to look at. So you can note these down. You don't have to go and check out each country, but you just want to look at this and maybe compare it to other mining companies. Now we have what we call junior mining stocks, which are companies that are emerging, okay? And sometimes places like Barrick Gold, what they do, some of the work that they carry out, they can't do with what they have. So they hire companies to do some of the work for them. So that's another key tip I'm going to give you from my own playbook, is you might want to look into junior mining stocks too. But before that, you want to look at this and find out their ownership, understand, where the asset, what's their place in the market, so that really what you want to find out is their market share. Okay, how much, if the market share, and also their share in the market cap. So let's say the market cap is 100 million. You want to know how much percentage of that comes from, let's say, Barrick Gold. And the more it is, the more highly important it is to know exactly what's going on, and then to know what's going on with gold. Because if something happens with them, they could. I'm running my head of myself because I have so many things to say. Let me pull back. So this is the first thing. All right. So if you find a table of content, okay, one of the things you want to go for next is I'm going to write this down. I'll try to recap on this next lesson. You want to go for key performance indicators. All right. Now, the key performance indicators, now, because they produce more than just gold, they produce copper, but still, you're looking at the gold. You want to look at the gold production. Okay. How much their gold production, One of the key factors you want to see is there an increase in production. So the increase in production means an increase in demand, which is price positive. Okay. And then also what you want to see is that you want to look at the increase in the gold price. So this is why I'm advising that you should analyze gold and the stock you're looking at if it's a gold mining stock. Okay. And then after, you want to look at the cost of production and then the gold AISC. AISC I'll go through in more detail. All right. But when you do what you do, the key thing I'll say to you is definitely look at this. Okay. When you, for me, when I look at this, I don't try to go and look for everything because there's too many things to look at. All right. But we will try, to make sure we do our best to look at as much as we can. Okay. Because one thing with technicals, it does tell you a good picture sometimes of the price without maybe going too deeply into the detail. Okay. But yeah, we'll go through it. All right. So then here you see their targets, what they targeted for 2020. This is a 2019 report, so they're telling what their targets for 2020 is, which is really good. Now, I know 2020 is a shaky year, so the numbers would be a bit different from most other years that have been in existence. But what you want to do is that if they have their 2020 report, okay, they have the Q4 results. When the annual report comes out for 2020, okay, you want to be able to compare it to the 2019 one and see, do they fulfill their goals? Do they exceed their goals? Do they just meet their goals every year? Do they just pass it? Okay, because that's going to also bring to the price positivity to the future. And so what you want to do is build confluence and build a good picture to know, okay, these are the things that are, these are the things that you're looking for, and the key factors that you want to take into consideration when it comes to the company. And I like Barrett Gold because they've made it in a sense where it's pictorial, because a lot of writing doesn't help. Okay, another key thing you want to do, all right, now, you can look at the board of directors, but opposed to cryptos, you want to look at this actually at the beginning, especially when it's because most cryptos that start out, they're going to start as an ICO, and then after, you know, they'll be on they'll already be tradable. That's the only difference with crypto. Everything is tradable. Not that it's bad, but the companies don't stay long being without being listed. Okay, whereas some companies take up many years before they're listed. Saudi Aramco, which is the largest oil company I talked about on Monday in the world, apparently is worth about $2 trillion. Okay, as a market cap, it's still not listed, which is for other reasons, and that's not important. But here, the message from the CEO is not really important, but you find out that I would usually say when it comes to these annual reports, you find out what you need at the beginning, and they've made it that way. Very in detail, deep investors, maybe they might read into some certain figures, but this is the major things that you need to look at. Okay. And then after, you could, all of these other things in small writing and etc. You can go for. Only other thing, thank God I found it as soon as I scroll down, is you want to look at the key assumptions. So key assumptions helps you to understand the infrastructure of the company, their analytical point of view, how they see things, okay, and try to compare it also. Now, 2020, we can allow every company because we know that I don't think everybody foresaw 2020 at least, okay, but at least you can look at these things here, look at the exchange rates and different things like that to see what their projections are from the analytical arm to understand how they're thinking, what their mind is at. And you can put these details together for you to work out, is the company doing well or not? Okay. In comparison to gold. That's one thing. And then what you want to do to end it off, because I can see time is short, we'll have to continue this. Final thing, after you've looked at the company, you're going to have to start making notes. Okay. So I'm going to put this out here. I'm going to switch back to, are we back here? Yeah. So we have to make some notes. So I'm just going to end this off here. I'm cutting it early, guys, because I try my best not to go too long, because I know that after a while it gets a bit difficult. Okay, so key notes to write down. All right. So if you're doing for this is if you're doing the like for like method. If you're looking at the asset itself, it may not be too much to read into. Okay. But with the stock, because there's people involved, there's going to have to be things that you look at. So number one, to finish it off. All right, so we're looking at the earnings reports. for sure. Number 2, annual reports. Okay. Simple question you're asking: are they in a profit or in a loss? Okay. That's one simple question to ask yourself. Annual report is how progressed over the year. You know. Another question: have they fulfilled all their goals? And as I always say, that for you to be rich or for you to be poor is by asking yourself a certain set of questions. So these questions you're asking yourself, you should congratulate yourself because you're making yourself rich by asking these questions. All their goals. All right. So these are the questions you want to ask yourself. All right. Okay. What makes a company do well sometimes, of course, is the asset. In this case, is mining, but also is the team. So if as a team you see that they hit their goals quite consistently, their team is solid, which is a very, very price positive point. You know, compared to gold, gold's price positive point is the supply and demand and nothing else. But with companies, it's a bit different. So these are a few questions you can ask. There are more to it. There is more to it. There are, but we'll go through that. Number 3, you want to look at their key assumptions, understanding the mind of their analytical financial aspects of the company. Okay. So if you see that their key assumptions are very close to it, okay, you can use them, you can use their financial figures models to be able to help you get a good prediction as to, what's going on and what their psychology is as well. You can also find out the psychology from finding out what the team says or what are their key focal points and what the CEO says. So you can also read the CEO's um, his his speech as well. Sometimes it has nothing to do with anything. It's just a nice speech for investors to feel comfortable, but you can dig into it. All right. So number 4, sustainability. In this case, because we're dealing with a commodity that requires um, you to dig grounds and things like that. There's a lot of laws, a lot of countries. Some people, when it comes to the mining industry, it's a very dangerous industry too. People die, people get shot because sometimes locals don't want companies to be harvesting their land of their goods, and so they kill them, which is the truth. You know, if you ever want to look at an interview, I'll find some interviews if I can find some of people who work in mining who have lost friends where they've been shot at from helicopters, who've had to run back and leave that country, even and leave their mines. They've been chased away from their mines. So the mining company is a mining company to still be around. For example, like Barrick Gold, you have to commend them because mining is a very dangerous industry, has very high risks, attached to it. So sustainability results and reports are very important. Okay, when you look at when you're looking at the price of and looking at the condition of a company like a mining company here. Okay, sustainability report. Now I'm going to give you the key point here. Look for connections with junior mining stock companies. Okay, for outsourced work. Okay, so this is the 5th thing that you can do. Okay, and this is some study. So I'm going to leave these 5 here because of time. It's already 10:30 and I don't want to hold you guys for too long. Okay, we'll put that out here. So these are the things to write down, and I will continue next week, I promise. I hope you guys enjoyed that and you guys can have some fun.